Good day, guys. Welcome back. So in this lesson, we're going to be showing you how to manage your trade, right? So let me just quickly edit this. So break even, for those that don't know, is moving your stop loss to entry, right? When we say break even, we mean move stop loss to entry. Spelling. Okay, correct. There we go. So this applies to both 1 to 2 and 1 to 3 trades. When a trade moves 1% in profit, move your stop loss to break even. I'm going to show you guys that now. Note that price can come back to entry and take you out, then continue moving to the direction of your trade. Moving your stop loss to break even is allowing you to remove your feelings from the trade. This helps with emotions and also allows you to be confident on holding your trade to hit TP. A break even trade, if taken out, you lose nothing. It's a zero, right? This also helps in cutting your losses, right? So now let me just quickly show you how you can do that. So I'm gonna use the same. I'm gonna use the 10K account again. So we're risking 1%, right? And then we're targeting on this one going to be a 1 to 2. On this one is a 1 to 3. So we're risking 1% to make 2%. So our 1% is $100, meaning that when this trade moves 1%, which is going to be $100 in profit, that's when we are going to move our stop loss to break even, right? Meaning that our trade now is something that I didn't add. Let me just edit on this one. So this means that our trade now is risk-free. Jeez, man. Oops, I did something wrong there. Oh yeah, there. Our trade become risk-free. Our become risk-free. Our trade become trade become risk-free. There we go, right? So by moving our stop loss to break even, this allows us to remove our feelings from the trade and allows us to be confident in holding the trade to go hit TP. And also our trade become risk-free, meaning that if it come back and take us out, we lost nothing. We didn't lose 1%, we lose nothing, right? Wait, we lose nothing. Yeah, mean we close with a zero. Yeah, you win nothing, you lose nothing. Yeah. So this is how you manage your trade. The moment it moves 1% in profit, you move it to break even, right? For those that don't know, break even is moving your stop loss is changing the stop loss from this price to the entry price, right? I will do like a quick tutorial on how to move from break even to how to move your trade to break even on MT4 so that you can like be able to do that on your own, for those that don't know. And then once you're done doing that, and then you just let your trade to go hit TP, right? That's it. So that's how you can manage your trade. So this allows to remove yourself, to remove the feelings from the trade, and then allow your trade to go hit TP, and also helps you to be confident in holding the trade, right? And then the other thing is that after you've entered a trade and then you put a stop loss and TP, it's not easy to just put your phone away. So the moment it moves 1% in profit and then you move it to move your stop loss to break even, now you're even like now you are even like comfortable in putting your phone away and then forget about the trade because you know that you're risking nothing, right? So this also helps you with that. So on 1 to 3, it's going to be the same thing. The moment the trade moves 1% in profit, what you do is you just move your stop loss to break even, and then now your trade is risk-free, right? Yeah, I made a note saying that price can come back to entry and take you out and then continue moving to the direction of your trade. By this, I mean that price can, let's do this, and then you buy at a lower high, you sell at a lower high with a stop loss around here. And then when price move 1% in profit, and then you move your stop loss to break even. And then what price does is it moves 1% and then it comes back take you out, and then continue with the direction, and then maybe give you a double top, right? If you were not in front of your chart, and then what you're gonna see, you're just gonna see your trade closed, and then you're gonna notice that the market went and hit TP after taking you out. So these things are going to happen, but at least you didn't close with a stop loss. You didn't close with a loss, and then your trade went to hit TP. You closed with a 0, and then your trade went to hit TP. It's more like you didn't take the trade, right? So, and then sometimes when a trade comes back, you sell, stop loss above structure, and then it goes 1% in profit, and then you move your stop loss to break even, and then it comes back and take you out. Sometimes it's a sign that the market is about to change direction, right? So after you've been taking out on break even, wait and see what price is going to do next. Don't just jump again back in and then sell the market, right? Because what might happen is price may just continue pushing up, and then you change structure, and then you push the upside, right? So you first need to wait and see how price is going to react after you've been taken out around that entry price that you were in, and then you just relax, right? So in some of the pairs that are volatile, like USD, Nasdaq, I trade USD most of the time. So whenever it moves 1%, I move to break even, and then there's a high chance that sometimes it comes back and spike me out and then continue to the direction. So I kind of like wait at least, let's say maybe it move. What is wait, 1% plus 0.5%, that's about 1.5%, something like that. So sometimes I just wait maybe for a trade to move around, maybe to move around these areas, and then I start moving my stop loss to break even, because I know that this pair that I'm trading is volatile. There has a high chance that it might spike back. Also, depending on the structure that I'm looking at, there's a high chance that it might spike and then take me out and then go to my direction, right? So please make sure that you wait until the trade moves 1% in profit, and then move your stop loss to break even, right? And then you can just let it play it out. Don't wait for the market to just move. Let's say, let me just do another example here so that you guys can see this, because I know some of you will do this and then you will be taking out a lot on break even. Let's say this is your trade, and then your trade moves to profit this much, and then there you're moving to break even. You're not even giving it a chance, like to kind of like go down to 1%, then move to break even, right? When it don't wait, don't do it when it just move, just a small move, like few pips away from your entry price, then you move to break even. You are going to be taken out because it's too close. Price hasn't moved yet. At least allow the price to move away from your entry, and then you can see that, okay, cool, the amount that I was willing to risk is the amount that I'm currently floating at, and then you move your stop loss to break even, and then your trade becomes risk-free, right? So that's how you manage your trade. Always wait for a trade to move to 1% in profit, move your stop loss to break even, and then let the trade play it out. What you don't do is I won't be able to move that the stop loss again from the thing. So let's do this. So let me just put these two things here. One area, the do's and don'ts. So this is 1%. Okay, cool. And then let me just do this so that I can be able to see this is 1%. And then this is your, so this is going to be trader A. This is going to be trader B. And this is going to be trader A. So trader A is too nervous. They're scared to lose money. The moment they start seeing blue in the screen, what they do is they jump and move to break even, and the market is still playing around the entry, and then they are taken out, right? And then once they're taken out, and then they see price starting moving back down again, and then they enter again. But now when you enter, you are entering way lower than where you entered before, right? Now, let me just put another one because this one, I won't be able to move the stop loss thing. Okay. Okay, there we go. Right. Let's delete this thing. Let's do it here. Draw freehand and use my horizontal. Okay, this is your entry. This is your stop loss. This is your TP, right? So now the market comes down, gives you an entry, stop loss above structure, and then the price move into profit, small blue, and then you start jumping, move your stop loss here, and then price start playing around, and then takes you out, and then comes a drop, and then now that you move your stop loss too soon, you're still confident that that's a sell, and now you enter here, and then you don't have like you don't even know where to put your stop loss now because structure is around these areas. Oh, geez, come on. Structure is around these areas, so that's where you need to put your stop loss, which is above structure, right? So now you enter here, your stop loss is huge, your reward is not what you were planning to take, and now the price moves again small into profit, and then you do the same thing that you did, you move your stop loss to break even, and then it comes back, and then it takes you out, and then you do the same thing again, and then you just keep on entering, right? And then by the time you realize that, damn, your risk reward doesn't make sense anymore. Your risk reward doesn't make sense anymore, right? So that's why we always advise at least wait for the price to move 1% into profits and then move your stop loss to break even. Because now look at this. Now you're going to be getting almost 0.5% of reward, but look at your stop loss. You know, look at your stop loss. The stop loss is wide. It's like you're risking 130 pips to make 80 pips. It doesn't make sense, right? Even if you channel this trade, you would like you're gonna be what? Is it embarrassed? You're gonna be disappointed. Yeah, you're gonna be disappointed because now this was not part of your plan and you ended up doing things that we're not supposed to be doing. So that's why we say wait for price to move away from the entry. Wait for price to like move away from the entry. No, and then let's say you enter here. Wait for price to move away from the entry 1%, then move your stop loss to break even, right? And then if price comes back and take you out, then you wait and see what's going to happen around these areas before you enter again, right? Because if you're gonna do this, this is where you're gonna end up. You're gonna end up having a huge stop loss, and by the time you enter here and you have a huge stop loss, you're gonna have a mindset of saying that, let me just not put a stop loss. I will close when it's a certain amount that I'm willing to lose. And then it's going to move up and up and up and up. And then you're going to have hopes of that price is going to go down, forgetting that price has already moved down from your entry, which was here. This is already like a 1% already that you would have caught, or you would have moved your stop loss at least to break even. You know, this is about 1% of a movement that now you are being chowed by, you know, this 1% that you are supposed to be floating in profit, now it's floating in a negative, plus another 1% that you are willing to risk. So now you end up risking 2% to make what? It's more like to make 1%. You see, so not even 1%, it doesn't make sense. So that's why we say, wait for price to move at least 1% away from the entry, and then move your stop loss to break even, right? Don't do this where price just, and then you enter here, sorry. And then the moment price just start moving into profit, and then you go to break even. Because price might come back and take you out here and then continue. And then now you can, and then you want to jump in here, stop loss there again. And now the moment price start moving to profit, you do the same thing because now you're scared that you have a huge stop loss, and then you go to break even and then you're taking out, right? Remember, price at that moment is moving to the downside. This is profits, guys. This is profits that we're supposed to be catching, right? So rather wait for price to do what? To move at least 1% into profit. Wait for price to move at least 1% into profit, move your stop loss to break even, right? And then wait for the market to play out. That's how you manage your trade. Because if you don't follow your plan and then you start doing this, you're gonna end up in a loss. You're gonna end up in a loss on a winning trade. You're gonna end up in a loss on a winning trade, which is going to hurt you, right? You're gonna end up in a loss on a lose. Oh no, you're gonna end up in a loss on a winning trade, which is going to hurt you. So please stick to your plan, and then wait for the market to move at least 1% into profit, and then start moving a stop loss to break even, right? And then you wait, right? Don't wait for market to move into profit, start seeing blue, and then you move to break even. No, don't do that, because now that also plays with your psychology, and and then that's when you start not being disciplined, and you need to be disciplined in the market in order to see results. And if you're not disciplined, you won't be able to see results. So please stay disciplined. Okay, so this is gonna be it on this lesson, and then I'm gonna catch you guys on the next one. Cheers! Don't forget to study.